if you remember, on the public holiday Workers' Day, Access Holdings did release its earnings for full year 2025. They also released Q1 2026, but we're focusing on the audited financials for the full year 2025. You can see the impairment charge there, 113% climb, 532 billion, which impacted its net interest income. Now, the markets were closed on Friday, but they are of course open already today, so we'll have to see what the reaction is. There's also, of course, the discussion around the exposure of banks in Nigeria to the oil and gas sector in terms of loans, because that, of course, has come up with respect to oil and gas firms and how that's impacting impairment. We're happy to have Arise Business Analyst Chika Mbonu with us. Our banking analyst, aviation analyst, manufacturing analyst, he covers it all. Welcome, sir. Good morning to you.
Good. How was the weekend?
Fine, thank you. It's too short, but here we are.
We have Access Bank today to look at.
Yes, we do. We do. I'm dying to get your reaction. For full year 2025.
Yeah, 25. You see, as I try to delve into this analysis, I will recall a story that Access Bank reminds me of.
Yeah.
I remember when I was in secondary school, when I did one of my classes, I think last 3 or something like that. Usually I've been coming first.
Yes, yeah, I heard you first.
And one of the classes, I didn't do well. And then my mom particularly was very upset. And then class 4, normal services restored.
Yeah.
And she just did, when she saw the result,
yeah.
She said,
This is more like it.
This is more like it. So, for Access Bank, I'm doing, because for the first time, we just crossed a major milestone.
Yeah.
Over 1 trillion in profit before tax in 2025. With 16% growth. And it signals something very different, which is that this is no longer just a bank chasing size. And I'm going to talk a little more about that.
Right.
That chasing value and the quality of earnings. So I part of the heading I gave to my presentation is like, I call Access Bank from bigger to better. Bigger to better. For years, Access Bank grew aggressively, acquisitions, expansions, scale. The management is now saying we have grown. Big, now want to grow smart, want to optimize, value, shifts from scale to value. And that's basically what it is. But you see, it's an intentional strategy. Rotus, as I was watching the Miami Grand Prix yesterday, it reminded me the kind of strategy the banks do. If you look at the Grand Prix, normally, let's say a 60-lap or 65-lap race, the different race teams, some people start the race, after 10 laps, they want to change their tires. Some people will do another strategy. Yeah. They will run to about 50 laps before they change tires. All towards winning the race. Access Bank has been like, let me grow, let me go down and acquire, and let me achieve scale, and then from there I start optimizing. Whereas the other banks like Zenith and GT were saying, let's rest out there and build a bank. Now, Access Bank, in choosing that strategy, knew they're going to suffer in the short term. Less result, less profitability, lower return on assets, lower return on equity. And that's what has happened. So, but now, having done the acquisitions, the issue now is that they say we need to optimize. Numbers have spoken, size has spoken so much for us. Let's make every naira in business, in the business more profitable than it used to. Let's make our assets sweat. So coming in at almost 52 trillion in total assets. That's the largest bank in Nigeria. Largest bank in Nigeria. But you see, even as we're looking at the figures, there were some strong things. As I worry about to analyze banks in Nigeria, like when we did one of their banks, the issue was for me is like the core business. How is it doing? Forget about the ephemerals. The issue is the core business, the main business. For the bank, net interest income grew. Fees and commission grew by 41%. Operating income grew by 24%. So the core business is very strong. Now, and so they're not just a lending bank. They become a transaction services bank. Cost discipline is also very good. They brought down their cost income ratio from 56% to about 51%. So that's also good. Balance sheet size, 24% growth. Deposits, 53% growth. Though, you can add something there that said, the last acquisition was the Bank of Mauritius, and they came very large on deposits. So because when I was analyzing this, I said, how did the deposits growth commensurate with the growth in net interest income. It was because of the acquisition came later in the year. And again, just in line with the optimization that's going to happen to Access Bank going forward.
Yeah.
This is what that shareholder funds grew. So fundamentally, the figures are right. Figures are okay. In line with what is happening in the bank industry, so that the impairment charges also grew.
Yeah.
I'm going to talk about that in 1 or 2 minutes. Now, but so one of the major issues has been, as a result, I remember you called me and said, "Where's the dividend?"
Right.
I remember you called me, "Where's the dividend?" And let me put it out there to viewers. First of all, that is the authority of the board of directors to recommend dividends. And at the end of the day, dividends are approved when you make a recommendation by central bank and so on and so forth. After a lot of considerations, that has not happened. Now, but so what's happening now? What's Access Bank look forward to? Access Bank look forward to better returns on capital, earnings quality, not just volume. Digital platforms, non-banking income, remember the insurance company there, and also in pensions. So they're all expanding the whole financial ecosystem. So for the investors, I just tell them not to panic. Just like I told the other day when I said that the shareholders should ask themselves, do we need to enjoy short term?
Right. Or
someone long term?
Yeah.
Or do we patiently take the hit now and then profit from it? So for shareholders of Access Bank, I say positive includes strong profitability, diversified income.
Yeah.
I see that. And then improving efficiency, and of course massive deposit growth. And for the bank, therefore, no more acquisitions, they say.
Okay.
So it's now optimizing on what they have on the ground.
Yeah.
And we believe that, as I keep saying, it's sweat the assets.
So that means the bar, does the bar not go up?
No, but the issue is this. You can imagine applying the return on average assets of GT Bank or even Zenith on the access
numbers. Okay.
You can imagine that what the profit will be.
Yeah.
So they've achieved the scale they wanted to do. Being the African gateway to the world, they've achieved that. They're literally in about 21, 22 African countries. Everywhere you see, you have Access Bank. But the issue then, therefore, is how do we sweat the assets? Because the returns are still very moderate, as you said, thought about that also. Yeah. Banking still dominates revenue. 97% of revenue came from banking. So they need to sweat the other subsidiaries. And execution becomes a problem. Yeah. Also, it's a challenge. Because, there are multiple countries, and you need to push these countries to sweat. Whether it's South Africa, whether it's in Botswana, whether it's in Rwanda, whether it's in the Congo DR, whether it's in Ghana, whether it's in Gambia, that literally any country mentioned now, the Access Bank is not that. But the issue is sweating the assets now. I need to talk about
oil and gas,
the loan
exposure.
Exposure.
Yeah.
And let me tell you why I'm talking about this. Okay. I'm doing it also as an advocacy for the banks.
Right.
Because as a group I belong to this morning, and I read something there that said, they should arrest all the directors, lock up all the directors of the banks that look at how much they're writing off and so on and so forth.
Yeah.
And I said there that have you probed to the bottom to understand whether these loans went back because of executive amendment, that board recklessness, or other issues.
Right.
Lotus, you do projections at 600 naira to the dollar. And overnight, the exchange rate moved to
1.
Have you looked at the ability, the impact on the borrower's repayment?
Right.
Okay? A bank in Nigeria will give loans to a manufacturing company to build a plant, and then overnight, where the loan is still running, 1 year of they are not started producing, the government will give approval for massive importation of the same thing that are producing locally, almost a duty free.
Yeah.
You do a projection on the basis of 75% capacity production. Then what happens? No power, security, so many other factors come in, and capacity now will become less than 10%. How can you pay back the loan? So there are so many things that limit loan repayment in Nigeria. Now, for the oil and gas sector, especially the local oil producing companies who bought over the international oil company, the pattern oil assets. I worked on this thing about, I think last year or something like that, early last year, the agonies of these Nigerian companies who acquired these assets.
Yeah.
You know, they were suffering because a lot of them were land assets. And then remember, you have 1 million barrels at the well site. And by the time it reaches to stealing, pipe, vandalism and everything. Right. And all of them, and the big, the small, all of them were suffering. And so you find people who have borrowed money from banks actually producing, but they cannot sell.
Right.
You know, of course, I'm not excusing anybody. There may have been issues of mismanagement and stuff like that. But the systemic issues that happen in the country affected that. I actually did a program on that and said the government should actually come out and assist the local indigenous companies that acquire these offshore assets. A lot of them are having challenges in managing the assets, whether it's security, whether it's vandalism, and so on and so forth. Yeah. Even frustration from the regulatory authorities. Then, so that is that. So, Roach, I'm going to tell you that one loan does not stop a bank from paying dividend. Yeah. The big 5 banks are well capitalized to take the provisions in. Dividends are not paid because of overall profitability, because of regulatory requirements, because of capital preservation, not just because of one loan. That's something. Bad loan. You know, okay. You can lead to one higher loan provisions, but not the fact that you stop that. These other things in the basket determine whether the bank will pay. For Access Bank, for example, remember they have been doing these acquisitions. Yeah. You know, it could be a consideration. Could be that let's preserve capital and use it to, expand and feed our positions. Yeah. Instead of going out there to look for expensive money. And so that shareholders bear with us in the short term. Right. In the long term, you are going to be dividend. Maybe not in this half year coming. Yeah, but maybe next year. But I think that they have done their positions. If I know them very well, they're going to run the banks, sweat the assets, and things will happen for the bank down the line. Okay. So there's no systemic issue. I put that there. And people who are writing things about the banking laws was very sensitive about it. Yeah. Now, the last thing I want to talk about is...
less than a minute,
People don't... One of the criticisms for banks that they don't give loans. But people don't talk about the price banks pay
for those loans. Cost of funds and so on. Yeah.
Not that. Yeah. These write-offs are the depositors' money and shareholders' profits. Nobody talks about that.
That's a good point to make, though, about who is impacted by this.
Yeah. So banks are paying the price in the economic challenges we have in the country in giving out loans, and the ones they us sometimes, they don't recover. Come back. And they want them to give more. And we should remember that always.
It's an important point. Yeah. All right, business analyst Chika Mbonu. Chika, we always appreciate the knowledge you share with us when you come and discuss these banks. Thank you so much. We appreciate your time.